Welcome students. Earlier we have already discussed about the non-profit organizations related to the concept, features and the difference between the non-profit organizations and the profit organization. But in this class, we will discuss about the how to prepare the non-profit organization's final account. The final account, generally in these lectures, we will give the one part of the non-profit organization, that is the receipts and payment account. But the final account, generally every organization needs to prepare to reflect the financial transactions of the organization. The final account is divided into the three parts: receipts and payment account, income and expenditures account, and the balance sheet. Generally, the income and expenditures account and the balance sheet depends upon the receipts and payment account. But in these lectures, we will discuss only the one part, that is the receipts and payment account. The receipts and payment account is just like the cash book. You know in the class 11th how to prepare, but it tells about the summary of the cash book and related with the real account. It records all the receipts and payment. I'm saying the receipts and payment records which is already received or paid, not payable, not receivable. And it also consisting with the revenue natures and the capital status item, mean the short term and the long term items. Periods may be the related to the receipts and payments may be recorded, may be of current years, previous years, or the future years. It start with the opening balance, may be related to the cash or bank, and also end with the closing balance of cash and bank. In this account, no adjustments will be done. Payable or receivable items will not be recorded. And the next I'm going to discuss about the specimens of the receipts and payment account. When I'm talking about the receipts, I'm talking about the amount received. And when I'm talking about the payment, it means I am talking about the amount paid. You may see here that means it is started with the opening balance and end with the closing balance. At the end, you may observe. And now, at the parallel, we have discussed about the first is it is related with the income receipt. When I'm talking about the income receipt and the parallel, we have in the payment side all the expenses paid related to the operating natures item. Operating natures items are saying to related to 1 year period based items, revenue natures items. And these are the examples of the income: subscription, receipt, donation, entrance fees, dividend. These all the items are related with operating incomes. And all the expenses like salary paid, rent paid, insurance paid, all are the items of the operating natures. Receipt will show to the receiving side and the paid items will be shown to the payment side. And now I am moving to the asset side now. If any asset is sold, the money flow will come inside. So it will be considered as the receipt. So sale of fixed assets, maybe land, building, furnitures will remain to the receipt side. But any asset if purchased, the flow go outside the business. So it may be called as land, building, furnitures. If any furnitures, any land, building purchase, it will be shown to the payment accounts. Now, if any loan has been raised from the various sources, the money flow come into the business, so that's where it will show the receipt side. And if any loan has been given, again the payment, mean the repayment of the loan flow is going outside, it will be recorded in the payment side. And now the last is the balance. Balance, if it is positive, it will be shown to the payment side after deducting the receipt side. But if it is the bank overdraft is there, then opening balance is indicating still payable item. Still have to pay the balance. Opening will remain to the payment side and the closing will remain to the receipt side. And now I am discussing here the one illustration. This illustration is related with the preparations of the receipts and payment account of Metro Club Delhi. The date has been given like 31st March 2020. The opening balance is listed here, 8,500. Subscription received is related with the current year, previous years, and future year. All has been given 30,000, 2,000, and 1,000. All will be recorded as a receipt side. And next is the life membership fees is also recorded in the receipt side as a 7,000, and investment if it is purchased, that it, the flow is, because it is purchased, the flow is going outside, so we record it into the payment side. And the donation always remains the earning side, so that means it is donation received will be recorded on the receiving side, and the salary remains on paid, so it will show to the payment side. And in this example, at the end, the charge of depreciation 10% has been given, salary payable is outstanding has been given, accrued interest on investment is also receivable is given. These items will not be recorded in the receipts and payment account. So this is the solution of the receipts and payment account. You may observe it start with the opening balance of 8,500 according to the illustration, and now to subscription previous year, current year, and coming year, future year has been listed here with the total, and the two life membership fees 7,000 is also on the receiving side, and the two donation is also on the receiving side because it is a source of earning. And now the payment side, you may observe like the investment is given, but this investment is investment purchased, flow is moving outside, furniture purchased, flow is moving outside, salary paid, flow is moving, cash flow is moving outside, and the till end it has been closed with the balances. And now thank you.